Taylor Riggs in New York in for Emily Chang, where she is based in San Francisco. And this is Bloomberg Technology coming up in the next hour. It is the public debut of the year. Coinbase going public via a direct listing, shunning that traditional IPO market and the trendy SPAC market as it eyes that $100 billion valuation. And well, it closed in its debut at a 328.28. That is 14% below the opening price, but it was the biggest direct listing ever. It's a win for the NASDAQ, the exchange where the company debuted. But it is so much more than that. Investors, analysts, crypto enthusiasts think, well, it is a big win for not only the democratization of finance, but a big win for Bitcoin and other crypto assets. Analysts repeatedly said a publicly listed Coinbase is the way to get professional investors and corporations to invest and allocate to crypto assets. Indeed, we saw Bitcoin and Ethereum trade at record levels today. Let's get right to the story of the day and my fellow lady in Burgundy, Bloomberg's Sonali Basak. And Sonali, we talked about the price being a little bit below where it opened. Do you still consider this a success?
Well, that's a hard question here because not only was the price lower than when it opened today, after we saw the price shoot past 400 a share, it dropped down to lower than 343. And 343 was where it was trading privately in private markets in the first quarter of this year. So do you consider it a success when it's trading in essentially what's a down round in public markets? The reality is we knew crypto was going to be volatile, but they really did have a huge headwind. Everyone was looking for that $100 billion valuation. They fell in at 85 billion or so. It's still a massive company, bigger than most exchanges out there. The question is, where does it go from here?
So talk to us about where it goes from here. Who are we thinking are some of the biggest winners from this?
Yeah, absolutely. You have to look at the people who not only invested early on, but stuck with Coinbase through its wild rides in private markets. That's Andreessen Horowitz at number one over here. They really doubled down on the company while others were privy to sell. Then you also have Tiger Global, who is becoming an increasingly popular Wall Street name as one of the hottest younger hedge funds out there, but also huge in private markets, investing more and more in startups. You have Paradigm, and then you also have Ribbit Capital, which is somebody to watch in fintech as well, given they have some relationships with Walmart as well. So, everybody that was in this pre-IPO stock are people you want to watch in future stocks. Everybody I'm talking to, Taylor, is already talking about Robinhood, which will be the next big fintech listing on the NASDAQ.
We couldn't get away from that one. Sonali, just another question. We've been talking with early investors all day long. Are you hearing that the company which they invested in 5, 10, you name it, years ago, is the same Coinbase that we see today, or is this a whole new company with new ambitions?
Listen, it's so much bigger of a company than it was before. People are throwing around all sorts of comparisons. Is this going to become the next really big neobank, right? How do you compare its customers from everyone to Chime to E-Trade, right? In terms of how much people are trading on it, and then how do you account for the growth of its custody business as more institutional adoption comes into play? There's also those Google, Facebook comparisons. What moment in history are we in, Taylor?
Well, we will continue to be following this story. Thank you, Sonali Basak, who's been working since the wee hours of the morning, bringing this story to you. Let's get more on Coinbase's direct listing today. We're joined by Katie Hahn, Andreessen Horowitz general partner and board member at Coinbase. So, Katie, of course, the perfect person to speak with today. What did today mean for you, for Coinbase, for Andreessen Horowitz?
Look, I think it was an absolutely historic moment, not just for Coinbase, but for crypto overall and for the crypto industry overall. It's just such an exciting time. That said, it's just one day. This company's been around for 9 years and it has decades more ahead of it. And we're just very excited about the long-term prospects of the company.
Is the company 9 years ago the company that you envisioned that it actually is today? Has it changed? How do you see this company?
I see this company as just, you have to understand the founder, Brian Armstrong, is just so visionary. I think he's always seen this vision. And I think one of the things that's so exciting is about what's next for this company. And if you think about what's next, already we have 56 million users on the platform with really very little spend in terms of paid marketing. But in classic Coinbase fashion, they're always dreaming bigger and looking forward. And I think, they are looking at what is going to happen with the next set of users. And when they talk about the next set of users coming onto the platform, they're looking at the 3.5 billion users worldwide with a smartphone who aren't currently using crypto. And in classic Brian Armstrong fashion, Taylor, it's like he's not thinking about the next 10 million users or even the next 100 million users, but how do we get the next billion users on this platform? So it's very exciting.
How are you thinking about that? I mean, you have an incredible background focused on cybersecurity, cybercrime, right? That's really where, in some of the early use cases where we thought Bitcoin would be, of course, as you mentioned, it's so much more than that. How do you translate those beginnings into a bigger use case?
Yeah, well, so I think, look, the narrative started out, as you mentioned, I was a former federal prosecutor, founded the US government's first crypto task force when I was at the Department of Justice, and did some of the big early money laundering cases at the Justice Department. By the way, also with fiat, not just with crypto. I was actually asked in 2012 to investigate Bitcoin. And I quickly realized that would have been a complete fool's errand. It wouldn't have been possible, but it also wouldn't have been desirable because there are just so many socially beneficial aspects, not just to Bitcoin, but also to crypto. And we're just excited about what we see at Andreessen Horowitz. We see as an entirely new crypto economy. It's about much more than just one asset. Of course, we're very excited about Bitcoin as a category and as an asset class, but we're excited about many, many other assets. And then apart from assets, we're excited about what we see is really, Taylor, a new computing platform, much like the iPhone was for mobile.
Interesting. Can you expand on that a little? Of course, you are a board member. You've keen insight into the direction of where you would like to take this company. What does that sort of ecosystem look like to you?
Sure. Well, let me just give you a couple examples, Taylor. I mean, we talk about decentralized finance or DeFi, but another category we're very excited about, and I think Coinbase is incredibly well positioned to capitalize on, given that it's a crypto first company, is what we call NFTs or non-fungible tokens. Now, NFTs, as you might know, are basically digital tokens, right? They live on top of a blockchain, but they're digital goods. They could be anything from, digital art, collectibles. One of the kind of ones that's taking off in a really mainstream way right now is NBA Top Shot. Some of your viewers might have heard of that. Full disclosure, we're investors in Dapper Labs behind NBA Top Shots. But this category of NFTs, it's kind of generational in some ways. I think some in certain generations have a hard time grokking, why would I pay for anything that I can't hold in my hand? But that's changing. And the next generations, they're already there. They're very used to living large portions of their lives online. They're very comfortable with spending money on digital goods. In fact, Apple makes billions every year on digital content, on in-app purchases. If you think of kids who are buying Fortnite skins or whatever on games, but you now think for the first time when you can program digital scarcity with crypto systems, now you have a really truly unique asset that you actually own that you don't have platform lock-in for. So we're very excited about NFTs. And as I mentioned, Coinbase is really poised because it's a crypto first company. I see Coinbase as the portal to the crypto economy. And I think people have no idea how big the crypto economy is.
Interesting. On that note, I am curious if you see future regulation helpful or hurtful for a Coinbase, a crypto.
Well, look, I think one of the things that Coinbase smartly did early days was they really invested in regulatory, kind of in compliance, in legal, in trust and safety and security. Again, very early. You mentioned the Coinbase of 9 years ago. It was a small team and it was very costly. It cost millions of dollars out of their budget to go get all of those licenses, not just from 50 states, but from the countless jurisdictions where they have customers, because of course, Coinbase is a global company. So that was a costly decision. And they did that, and I think that set them up incredibly well. Coinbase has always leaned in to the regulatory environment. They haven't shied away. They have pushed back at times when they felt like regulations were overreaching. However, I think one thing that really sets Coinbase apart is how it has leaned in to the regulatory environment. I think it's, like I said, a testament that they would invite a federal prosecutor onto their board early days, right? So there's that. But I see one of the things I'm seeing changing, and I think I remain hopeful for the US regulatory environment. Of course, there are regulators all over the world, but let's talk about the US for a minute. I'm actually hopeful about the regulatory picture because I think one of the old narratives was, oh, crypto's just used for illicit finance. It threatens national security. When the reality, Taylor, I can tell you firsthand, the reality is that actually blockchain technology can help to combat illicit finance because it's digital breadcrumbs. There's more transparency. And in fact, there are entirely new businesses being built right now that investigators worldwide and prosecutors are leveraging to actually help them solve crimes and prevent illicit activity. And then when you talk about national security, I think I'm starting to hear a shift in tone, which is encouraging to me, that actually the greater national security threat is for US regulators to not embrace crypto or to shun crypto, particularly at a time where, for example, you have the Chinese government launching a digital cryptocurrency and they're exporting it to other countries. So I think we're starting to see regulators understand that there's actually a bigger national security threat from shunning.
Is the US behind? Are we too far behind China at this point?
I don't think we're too far behind China at this point, but I think the next 4 years are going to be absolutely critical. So we're very hopeful that with the Biden administration, that they have an open mind toward crypto, not just, by the way, for national security, but we also see it as a very large, it has large potential for economic growth.
Fascinating. So many places we could go. We'll have to get you back on. Katie Hahn, Andreessen Horowitz, general partner and board member there at Coinbase. Perfect guest for a day like today. Coming up, more on Coinbase. You guessed it. What ARK Invest CEO Cathie Wood has to say about its blockbuster direct listing. And then, of course, later, CEO Alex Adelman of Lolly. It's a startup focusing on Bitcoin rewards. And, of course, an early Coinbase investor, Alexis Ohanian, joining us to discuss the long-term implications for the crypto space. This is Bloomberg. Coinbase's trading debut ushering in a new era for cryptocurrencies. Bitcoin neared $65,000 for the first time, though it has erased some of that gain. It closed at about $62,000. Although we know it doesn't actually really close. That's a good thing. You can trade this all weekend, you guys. Bloomberg intelligence analyst saying it could soon hit $70,000. That is similar to when Tesla allocated a portion of its wealth to Bitcoin back in February and helped the digital currency breach that $40,000 resistance level. Joining us now to discuss resistance and support levels, Mike McGlone, Bloomberg intelligence commodity strategist, who's a Bitcoin enthusiast as well. Talk to us about some of the other key support levels that you really see for this.
Well, I think the big level is 50, and it looks like we've put that in the distance. I don't know if we're going to get back there. We need some kind of major risk-off event. I don't think it's going to happen. Now, the next support's moved up to 60,000. What I sense is, Taylor's bids just keep rising. Like Coinbase happening today is just part of this market coming into the adult space. And it's trading like it's much more of an adult bull market. So I think the next level is 70,000. A key indicator is volatility. 30-day volatility on Bitcoin's dropped to the lowest level since when it broke out from 10,000 in October, December. And I don't know what's going to stop it here.
I love that you mentioned volatility. We heard from Cathie Wood of ARK Invest earlier today. She spoke about volatility. Take a listen to what she had to say.
We expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is. It makes most of its money on the trading of Bitcoin and Ether. Those are the two biggest, and it's going into a lot of other cryptocurrencies and crypto assets.
So we talk about the volatility within the individual cryptos, but then you're also seeing some volatility, as she's suggesting, within Coinbase as well. Do you see the two tracking each other?
I think so, but the key thing to remember is Bitcoin started it all. It's the benchmark, it's the beta, it's now the global digital reserve asset, and it's really a very small portion of most people's portfolios. So it's nascent getting there. Kathy Woods is part of that. Tesla is part of that. She's in both of those spaces. So Coinbase is more the equity, but what I see is a lot of that equity money is now going towards Bitcoin, and Bitcoin is becoming potentially the risk-off asset because funds are flowing towards Bitcoin. And, you know, it's basically generally very much from gold and the rest of the space. Look at it as a bond portfolio. I think it's very much of a complement. So it's just a question of where the next levels are and what might trip it up.
Can I push back on that a little bit?
Sure.
Is it really going to be the new store of value relative to gold? I mean, is that really what people are seeing?
So here's one of the most significant things that happens in markets, and just observing human nature. It's the classic human nature that you've been investing in gold or assets for who knows however long, that what I've seen shifting this year, if you do not put some of your maybe 100 units, maybe 1 or 2 units into Bitcoin, you're at greater risk of looking like a fool 10 years from now versus 1 or 2%, not a big deal. So everybody's having those discussions. I'm hearing part of the trickle up, and it's just a question of getting into the space. That's why I see a trickle up bid in an orderly bull market, 30-day volatility dropping to these low levels. And it's not having those sharp corrections or sharp rallies. Maybe we're just going to continue to migrate. So I think we're going to 70, and if it takes a little bit longer, that's better rather than jumping right up there and then dropping back to 60. And that's what happens in a good bull market is, if you see up 2% every day, that's zero volatility versus going up 10 and down 5. No, that's volatile.
You're getting into the weeds with the math. I love it. Let's talk about another story that you had about sort of the next levels to really legitimize this. We've talked about Tesla, right? MicroStrategy allocating a portion of their own sort of treasury dollars, so to speak, in this. Is that a real store of value? Does that legitimize this? Do you see other companies follow? Because like you said, you're the fool that doesn't get in.
Yeah, well, that's the problem now. And I mean, that's actually, it's a good thing, but for every money manager who's not in, that's the problem. Uh-oh, I'm not in this space. I'm looking like the fool. I'm looking like the naysayers who have almost all have flipped. Then I probably need to get involved. So look at it this way. You're holding a lot of gold. Say you're a central bank, and that gold is a pretty solid reserve asset. But the gold flows are clearly moving away, certainly from ETFs, and towards Bitcoin. In a world going digital, this digital reserve asset in the future could be the new gold. It's happening fast.
Wow.
So what's going to stop it? I don't know. But unless you expect digitalization to reverse, you have to have part of your gold portfolio in gold. So the way I look at gold now is I'm naked if I don't have some of that in Bitcoin.
Fascinating. Okay, trick question, because it's 5:20 on a Wednesday. What's the question I always ask you at the end of our segments?
Where are we going?
No, I need to remember my password. I have
that's
Bitcoin
right.
and it's locked up in some password I can't remember. Mike, how do I get my password?
That's part of the strength.
I could retire.
Of it. Well, it's part of the strength, and it's part of when people say it uses a lot of electricity. Well, it's part of the strength of the network. I have a son who's 20, just started running a node. We have solar panels running that node. And anybody in the world can do that, but it's decentralized 24/7. And no one can trip that up. You see, if you have a whole country run out of power, it'll still trade. And that's the unique thing about what's happening in the future is what's going to stop this. And it's just the decentralization, DeFi, Kathy Woods is all over it. And Bitcoin represents rapidly advancing technology and innovation and pressuring things like the price of gold and, for instance, crude oil being replaced by technology.
Mike McGlone is only allowed back when he discovers my password to BitDog. Mike McGlone, our Bloomberg Intelligence commodity strategist, thanks for staying late for us here today. And we have to bring you another story that we're following: an abrupt leadership change at Toshiba, casting doubt on a potential buyout offers of the $20 billion Japanese conglomerate. Toshiba is replacing its CEO with the company's chairman. The change came as factions within Toshiba mounted resistance to a preliminary buyout offer from CVC Capital. Meanwhile, private equity firm KKR exploring its own offer for the company. And for a company that rarely shares its diversity details and internal issues of any sort, Amazon is setting a new set of commitments this year. We have all those details next. This is Bloomberg. We are all focused on Coinbase, but there were a few other stories making news today. Those, of course, Dish Network and its Sling TV unit taking on some of the biggest names in the streaming at-home fitness programs. They're suing Peloton, Nordic Track's Icon, and Lululemon for allegedly infringing patents. The lawsuit accuses the companies of using Dish's technology that improves the quality of video over the internet. No response yet from the defendants. And Facebook will conduct an experiment. It will allow more users to block like counts on their own posts or content from others. It's expanding an effort to gauge whether the feature intensifies peer pressure, especially among young people. Facebook says that so far, results are mixed. And Amazon setting hiring diversity goals for this year. The e-commerce giant says it aims to increase the number of women and Black employees in its senior ranks and really increasing the number of women in tech and science roles. It's an unusually detailed announcement for a company that rarely discusses the makeup of its workforce in public. And coming up, we're speaking with Lolly's CEO, a startup which focuses on Bitcoin rewards, and of course, an early Coinbase investor, Alexis Ohanian, on what Coinbase going public, doing that direct listing, what it means for the broader crypto space. Take a listen to him back in 2014 discussing Bitcoin.
I think there is absolutely a place for it. It's one that needs regulation. It's going to need a cautious hand. But I think the right founders are building some amazing platforms right now, and I hope it means a great future.
This is Bloomberg Technology. I'm Taylor Riggs in New York, filling in for Emily Chang. Let's head to San Francisco. Bloomberg's Ed Ludlow standing by with the wrap on the markets. Ed, at least in New York, we were all so curious only about Coinbase. What was San Francisco focused on today?
Well, I was going to talk about how stocks came off record highs because big tech was under pressure. Yields up by a couple of basis points, big tech under pressure. No one's paying attention to that. The only story really was the Coinbase listing. And broadly, like, there's such a big narrative, right, Taylor, around cryptocurrencies that comes with it. You can see Bitcoin's actually showing that it's marginally higher by around 0.5%, but that's because it trades pretty constantly. As Coinbase listing, we saw that pop and then decline. It carried Bitcoin lower with it. It was interesting to see, though, that Ether maintained its gains, currently up 1%, trading at a record high of around $2,400. All the narratives around mainstream, acceptability, cryptocurrencies becoming part and parcel of normal life. If there's one guy you want to hear from on a day like today about mainstream and normal life, it's probably the Federal Reserve Chair, Jay Powell. Here's what he had to say.
What people call cryptocurrencies, they're really vehicles for speculation. No one is using them for payments, for example, like the dollar. What they're using them for is to speculate. It's a little bit like gold. For thousands of years, human beings have given gold this special value that it doesn't have from an industrial standpoint, but nonetheless, for thousands of years, they've done that. So Bitcoin is much more like that, and the cryptocurrencies are much more like that.
Even so, right, coming into today, into Wednesday with the Coinbase listing, there was so much interchange, so much relationship between the anticipation with that and Bitcoin. This is the year-to-date chart, and you can see the white line is Bitcoin. We're up more than 100%. We know about Tesla getting into Bitcoin. We know about big financial institutions bringing Bitcoin access to mainstream investors. This is the orange line, the Bloomberg Crypto Index, also pushed higher because there are other forces at work there. It's interesting to see the close relationship that investors gave with this listing and how cryptocurrencies are part of everyday lives. Flip up the board a final time, though, because equity investors were a little more cautious. These are stocks that are associated with cryptocurrencies, right? Blockchain-related stocks down pretty significantly, really feeling the effects as Coinbase slid throughout Wednesday's session. And also, we're seeing Coinbase in the green here, saying that it's up 31%, but that's against the reference price, right, of $250 per share. It's just one day, a snapshot in time, Taylor, but I'm really interested to see how this is addressed longer term. Interesting to see Cathie Wood sees volatility on the horizon. Is that the case, or will this be the start of a bull rally, not just for the stock, but for cryptocurrencies as well.
Well, Ed, here's the good news. You kindly matched your tie with my burgundy shirt. So since we are matching, I will invite you back on the program,
It's the
Ed.
small details,
And
Taylor.
you can answer those questions about Coinbase as the week progresses. Thank you, Bloomberg's Ed Ludlow, joining us there in San Francisco. So, of course, we have to get back to the big story of the day. What does Coinbase's debut mean for the broader crypto space? One startup betting on the popularity of cryptocurrencies, Lolly. This Bitcoin reward startup wants to reinvent the way consumers receive cash back on their purchases. It allows them to receive Bitcoin when they shop with their online partner brands like Nike, Sephora, Microsoft, along with over 1,000 more other retailers. So will consumers want to open up their minds and their digital wallets as cryptocurrency becomes mainstream? Let's ask Lolly co-founder and CEO Adam Edelman, alongside an early Coinbase investor and founder at 776, Alexis Ohanian. And Alex, I wanted to start with you because you hear so much about how this has really legitimized the crypto space. What happened today that changed the way you're thinking about your business and a rewards program with Bitcoin?
Yeah, so the Coinbase IPO was incredible for the space. It was a validator that you can create a cryptocurrency company and you can make Bitcoin more accessible to the world, and you can have real market value in something such as a centralized market, such as the New York Stock Exchange. So I think Coinbase was great. The Coinbase IPO went really well. It was above, I think, what many people expected. It did, have a little bit of a dip. And the Jay Powell quote was really interesting. But if the government doesn't recognize cryptocurrency and it thinks it's just as a speculation, the U.S. government's going to get left behind, and thus the U.S. people are going to get left behind. I think we need more companies like Coinbase and Lolly that are leading the way for mainstream adoption of Bitcoin, not just being a speculative currency, but actually a currency that is being used by millions of people.
So, Alex, big words there. Alexis, let me bring you into this. Do you agree? I mean, has this really legitimized sort of a business that you believed in just a few years ago?
Oh, very much so. And look, I was very fortunate to have been among the earliest investors in Coinbase something like 8 or 9 years ago. Those were the early days of cryptocurrency. And we've seen 3 waves of adoption here. We saw mining, we've seen buying, and Coinbase has been at the heart of that. And I really believe earning is next, and that's the piece that Lolly satisfies. And look, it has now normalized crypto as something. It's it's a publicly traded opportunity now via Coinbase, and something that anyone with a smartphone and a bank account can now get an on-ramp to. I think we're going to see more and more diversification, and especially the portfolios of our generation, digital natives, not going to look anything like the portfolios of our parents and grandparents. And that's why I think you're seeing a lot of the increased adoption. But now more and more institutions are actually going to find ways to use crypto as yet another part of a healthy and diverse portfolio.
Yeah, Alex, let me come back to you then, because you just heard Alexis mention it's not just Bitcoin, right? Like, this is so much more than that. It's other cryptos. How are you thinking with your platform that maybe it's Bitcoin cashback rewards, or maybe it actually turns into being, Ethereum, you name it, so many other cryptos that have now become legitimized?
I think Bitcoin is the most important cryptocurrency in the world right now, and it's one that has already proven its value to society. I think that things like stable coins are starting to prove their value to society as being a more efficient medium of exchange. Bitcoin is the best store of value over the last 10 years, and that's undeniable. Stable coins are going to make transactions on top of fiat rails way more efficient. I think merchants are tired of paying fees on every single transaction. They're tired of fraud and not having not having an immutable currency like cryptocurrencies allow for. So I think stablecoins are going to usher in this next wave of adoption with more efficient payments. Merchants, our merchants included, are going to adopt those stablecoins to accept Bitcoin more widely. And consumers should ultimately have the choice of whether they pay with Bitcoin, whether they pay with stablecoins, and they should opt into the currency of their choice, whatever is more efficient and makes more sense for their needs. And then merchants should be able to accept any currency that consumers are willing to pay with.
Alex, let me follow up with you again then, because you mentioned that consumers should be able to pay with whatever currency. Just given the numbers on your platform, have you found, I know, for example, I use Rakuten, but it's dollars, it's cash back. Have you found that consumers have pivoted to your platform because they indeed actually want Bitcoin versus cash?
Absolutely. So Rakuten actually bought my last company, so we know them well. So we actually, since we launched, Bitcoin was at around $4,000. Now, Bitcoin is clearly at all-time record highs at 64,000, 63,000. So effectively, we're 10 times, 12 times better than Rakuten at this point for many of our users. People want a currency that is continuing to go up over time. I think they're tired of non-inflationary currencies. Inflationary currencies. And so they're looking to things like Bitcoin that are better stores of value. And so far, they've been very happy with earning Bitcoin over cash for their everyday purchases. I think over the next few years, as users start to get the choice to earn Bitcoin as sort of their Bitcoin being their savings account, and then they can use stable coins as their spending account, I think that would be the most efficient medium of exchange, coupled with the most efficient store of value for the perfect payment cycle.
Alexis, let me come to you as an early investor in some of these companies. I'm thinking Coinbase, the way it has changed and become really a different company, and how we think about crypto has changed so much. What are you looking for in terms of maybe some of the exit strategies or the future growth opportunities as you really have your eye on some of these early sectors?
Well, a glaring one for me, and the reason why Lolly was such an obvious investment, crypto still remains the domain of predominantly men, and yet half the population is women. And when you look at consumer spending and just sort of activity of dollars, you'd be really, really naive to ignore half the population. And so the reality here is, there are lots of people who are actually getting on board with Bitcoin for the first time via Lolly, because it's an on-ramp that doesn't require you to go through the hurdles of like getting in the mindset of I want to be an investor and I want to invest in this and syncing all the things you have to sync, but instead saying, look, you're already shopping, you're already buying online, you want to save money, do it in Bitcoin instead of dollars. And that's a powerful value proposition that's attracting more and more women in addition to men. And I think that's a huge, huge opportunity, because if we accept that Bitcoin and crypto is around to stay, it would be pretty naive to not be building products and not be building services that are going to serve the entire population. And I think that's continues to be a huge room for growth.
Are women coming to you and telling you that this is indeed the way in which they feel comfortable?
Absolutely. So we saw when we first started Lolly that one of the biggest problems in crypto is that it was reported that only 4% of all crypto users were female. And I wanted to share Bitcoin with my mom, my sister, my friends, and I felt like, in a lot of cases, women are more risk averse than men when it comes to investing. And so if we can attach it to something that everybody does, which is shop, and we can also create or work with some amazing creators and athletes like Serena Williams and Michelle Phan that speak to tens of millions of women every single day, we can reach more people with this financially inclusive product like Lolly, and we can make Bitcoin more accessible to everybody, which is our core mission.
Fascinating. Thank you to both. I mean, Lolly's Alex Edelman, of course, Alexis Ohanian, the 776 founder. So great to have both of you on a day like today. Really appreciate your time. You'll have to come back. And coming up, it's a city built on blockchain. That is one CEO's vision to create a smart city in the state of Nevada. It will have a new type of government entity and ultimately, quote, democratize democracy. More details in our City Lab segment, which is next. This is Bloomberg. Imagine a city built not by muni bonds, but on blockchain. It may not be such a flight of fantasy. Blockchain CEO Jeffrey Burns envisions a sci-fi suburban business park rising from the high desert in Nevada. Let's get some more insight into what this 67,000 acre utopia, what that would look like, what that means. Let's do it with Bloomberg's Laura Bliss in our latest City Lag segment. Laura, how does this work?
Yeah, thanks so much for having me. So this is a parcel of land in the northwest corner of Nevada, just outside of Reno. And the CEO of a company called Blockchain, Jeffrey Burns, is someone who's all about cryptocurrency, the decentralized network-based digital technology that the listeners have just been hearing about, including Bitcoin. And he envisions building a city that uses Bitcoin and cryptocurrencies like it to allow for many of the functions that you'd find in a regular city, whether that's buying groceries or paying for gas or acquiring your personal identification card or even paying sales tax. And he envisions a city with more than 36,000 residents, 15,000 homes, and an economic output of $16 billion over the next 75 years.
And I mean, some of those photos that we were showing were just incredible. And what I love about these segments that we get to do with you, Laura, is I really got my start in muni bonds, where it's the traditional way that you build cities and roads and bridges, and you do economic development zones. And I'm reading the story and I see, lo and behold, there's an innovation zone. What would be in a blockchain innovation zone?
Right. So that is one of the interesting pieces about this proposal, which is just a proposal right now, right? I mean, Blockchain owns this parcel of land, and they're very much hoping to build. But to do it, they say that they would actually need a new kind of government entity. And so they've written some draft legislation that's now circulating in the Nevada State House to set up what are called innovation zones, which would basically allow any applicant from the private sector that is investing in emerging technologies like Bitcoin or others to develop a mixed-use community and gradually gaining control over schools and utilities and all the kind of public services that you'd normally associate with like a county. And it sounds pretty off the wall, right? But it's actually very highly supported by Democratic Governor Steve Sisolak in Nevada, who sees it as a way to diversify the state's economy, especially after COVID-19. Nevada's really taken that hard this year.
So the governor on board, what about local leaders? Because they represent the local people on the ground.
Yeah, actually the county leaders where Blockchain owns most of those land are not on board. They are not interested in having a rival county government, which is effectively what this would be. I think the CEO would say that it's necessary basically to be able to set up a kind of new form of government that relies on blockchain sort of from the ground up. I think there's other questions that get raised when you have a private company essentially taking the role of government. Like, you might think about the 19th and early 20th century company towns when we had timber companies and mining companies building and running towns sort of like their own local governments. But, in many of those cases, you had kind of these worker residents who didn't always have the same kinds of rights and protections, right, that you would normally expect from a government.
Well, we will get you back to discuss all of this more as the proposal maybe becomes reality. Bloomberg's Laura Bliss, thank you for joining us. And still ahead, Moderna says its COVID-19 vaccine will stay more than 90% effective for 6 months after patients receive the second dose. That is similar to results that we've seen from Pfizer. We hear from the Moderna CEO, Stéphane Bancel, next about when the booster shot might be available, how they plan to meet rising demand as countries pause the J&J vaccine. This is Bloomberg. After hours of meeting to review a rare blood clotting side effect of the Johnson & Johnson vaccine, a panel of U.S. public health advisors concluded without vote, effectively extending its pause while it's while they seek more data. A date to reconvene has not yet been set. There's little movement in J&J, as you can see there in after hours trading. We're off just a little bit of 0.4%. This, of course, all as New York City had to reschedule about 4,000 shots due to the J&J pause. This was according to the health commissioner, Dave Chosky. The quote, vast majority of New Yorkers will keep the same appointments but receive the Pfizer or Moderna vaccines instead. With increasing demand, how does Moderna plan to deliver enough supply? Bloomberg's Alex Steele spoke with Moderna CEO Stéphane Bancel earlier.
The current plan, we are tracking between 700 million and $1 billion this year, up to 2.8 billion doses next year with variants, which will require less mass. It's a lower dose. And so with the news evolving in the last few weeks, we are, of course, reassessing is that the right plan. And when we have any update, we will share this, of course.
Have you been getting more requests or calls from other countries?
It is clear that governments around the world are scrambling. As you see, cases are ramping up around the planet, Europe, and then Southern Hemisphere, given it's the start of their fall. And so I think people are worried. I mean, the situation, of course, has changed versus what it was 6 months or a year ago in terms of what vaccine is available, what type of efficacy, what type of safety profile, consumer preference. And so there's a lot of new things. And indeed, almost on a daily basis, I'm on the phone with sometimes one, sometimes several head of states.
So based on that, so it looks like you have 2 things you have to work out. Can you ramp up supply enough to deliver the kind of dosages that countries want, particularly in light of what's happening with AstraZeneca and J&J? On the other hand, you're dealing with what kind of efficacy you need for the booster shot, the variants. Can you do both at the same time?
Yes, we can, and we are doing right that. So on the variant front, we have currently in the clinic 3 different boost strategy. One is testing the current authorized vaccine in people that were in clinical studies a year ago to understand what will happen when you do that. We also have a very unique vaccine, which is basically 100% of a copy of a genetic sequence of a B151, the variant first identified in South Africa, that is also in the clinic as a boost to people that have been primed with the authorized vaccine a year ago. And we're also trying a mixed strategy, which is a product called 211, which is basically a 50% mass split between the authorized vaccine and the South Africa strain. And we think that this one should be able to boost basically all your antibody repertoire that you already have, and the new one. We actually put online a preclinical, so animal paper yesterday, showing that new boost has very, very nice protection against the South Africa strain. And so we are quite comfortable that this will translate into humans. We could have the data in a matter of weeks now in clinical trials.
In a matter of weeks, does that mean that we can get this booster jab if we need it in the fall?
That's our current plan. So it's assume a best case scenario like we talked about last year for the current vaccine, if you recall. So the best plan scenario that we're working towards, because the regulators have given very clear guidelines. We know exactly what we need to do on the boost to get those authorized. And so we are working to go out getting those boosts available for the fall, so that as the virus evolves through the Brazil mutant and the South Africa variant and so on, we're able to protect people with boosting in the fall and winter so that we can have a next fall and winter as good as we can.
You talked a lot on your investor day for vaccines about how it's going to be sort of endemic, like it's not going to go away, right? It's going to be an epidemic, not a pandemic. But if it's an epidemic, when can we expect it to be mixed with like a flu shot, for example, so it just becomes like part of our yearly thing?
Yeah, that's a great question, and we are working on that. We have a flu vaccine going to the clinic this year. We believe the flu market is not very well addressed by the current vaccine using older technologies. As you know, in a good year, efficacy of flu is 60%. In a bad year, is down to 20, 30%. And I believe that the world needs a high efficacy flu vaccine. And so we're doing that in the clinic this year. And then what we want to do very short after is to basically combine those 2 products, the COVID variant boost and the flu boost, seasonal boost, into a single dose that you'll be able to get at your pharmacy once per year in the early fall, so that you have a good winter without getting the flu or without getting COVID, whatever strain circulate at that time.
That was Moderna CEO Stéphane Bancel. And that does it for this edition of Bloomberg Technology. But tomorrow, Bloomberg's David Weston, he sits down with Bank of America's Brian Moynihan at 5 p.m. following the bank's earnings. You do not want to miss it. This is Bloomberg.